CNBC-TV18, embarking on a quarter century of excellence.
It was a blockbuster, record-breaking week on Dalal Street. The sensex and the nifty scaled new peaks and ended with 3% gains. It was the best weekly gain in 16 months. This was also the 6th straight week of gains, the longest winning streak in 3 years. Hello and welcome to Editors Roundtable. Today we take a look at India's growing retail equity cult. You can't miss that. FII is making a big comeback in November and the mid and small cap outperformance. I'm Sonia Shenoy, with me Nimesh, Nigel, Prashant, and we have a special guest joining us in a bit as well. But folks, it has been a great ride. I mean, I don't know any other way to put it, right? It's been a super ride for the Bulls.
I mean, if you guys remember what we were doing on Friday, same time here, when the election results had not come, and what a week can do, right?
Yeah.
Just completely. That Sunday, and then of course the rallies, which we've seen. I mean, spectacular.
I think you could have asked for anything more, right? We turning 25, markets at record highs, SIPs are continuing at $2 billion. Everything is doing good, right? And the good part is even the laggards like ICICI Bank, HDFC Bank, Kotak Bank, even they are now trying to come back in a big way and start to perform. So that's only going to help the Nifty to do further better from here on. So good week. Even the flows have turned positive. The FIs have been aggressive buyers as well for the first few days of this week. So I guess whatever could go right for us has gone right. And the good part is, I mean, of course, the fact that we've turned 25. I'm completing 18 years in CNBC-TV18, so it's been a...
Wow.
Actually, somebody was saying you've turned adult for CNBC. So I guess that's been a icing on the cake, so to speak.
Yeah. You know, I just want to take you back to Friday, not Friday, Sunday, which is the election result, because just a minute spending on what sparked the rally, right?
Yeah.
Because I think instead of talking about what may happen in the future, I think it is important to just rewind the clock back and tell you what has caused this excitement, because that excitement is still very much alive, the fire is still burning, and that theme will continue over the next many weeks as well. I'll just start with basically the gains that we've seen this week, Friday to Friday. The Nifty is up 3.5%, Bank Nifty is up 5.5%, small cap and mid cap indices are 2% and 1% up respectively. So you may say that mid and small cap indices have not done very much, and that would be true because they've done a lot before that. I mean, Nifty and Bank Nifty in particular really came back with some force. So the BJP's victory, I mean, in the 3 Hindi heartland states, I think is what has given the market so much confidence. And I think if you think back, why is this such a big deal? You know, the BJP basically had, in a way, put these elections forward as kind of a referendum for Prime Minister Modi's performance. Why am I saying that? If you think about it, none of the 3 states, MP, Rajasthan and Chhattisgarh, had chief ministerial candidates. I mean, not declared candidates. So this was about Prime Minister Modi. And all these 3 states, they lost in the last election 5 years ago. And the fact that they won all of these states in a majority way, I think is basically given confidence that 2024 is theirs for the taking. And it's important for markets because, you know, things like, you know, freebies and subsidies, etc., going into the elections, that was seen as a big risk. And I mean, we've been speaking with FIs, etc., who'd been negative, who'd been selling for the last 3 months. This came up as one of the issues. So, I mean, you know, to wrap this up, looking ahead, you're basically waiting for all of that stock which they sold, I mean, all the money which left to come back. That's going to be, I think, you know, the talking point from here on. And I think people would agree that that will come, maybe not in the rest of December, but in 2024, that should be the big theme going forward. Nimesh, what did you pick up?
You know, Prashant, as you rightly pointed out, this has been the big trigger point, the state election that the BJP won, that has clearly made the market believe that it's a clean run we're going to be for this BJP government to continue, and that's the big reason why you've seen the FI flows as well back. And the good part is this week's rally is largely led by large caps, and within large cap it's the private bank. Then the Nifty Bank Index is up 5.5%, and all the private bank stocks are now just trying to see the kind of, you know, return, so to speak, of outperformance. So clearly that was the flavor of the market. The large caps is what the FIs were bidding for. I guess from a near-term direction point of view, Nifty is technically in uncharted territory, so there is no technical reference, so to speak, for the Nifty or for the Bank Nifty. But I guess on the other side, in terms of flows, the QIP fundraising, the placements, the block deals, that keeps continuing. And the good part is because of so much of domestic liquidity which is there, it gets easily sold into and markets are not reacting to it. But from a direction point of view, the fact that we have a clean runway as far as the elections are concerned, I guess the large, FI pool money could be back, and that could actually mean that the large caps can continue to outperform.
Absolutely.
Okay.
And the point is that so far, markets, Sonia, and you were doing that piece, markets have reached where they are with no help from FIs.
No,
it's all retail.
It's all retail. After 2 months, actually, FIs have come back. In fact, Ramesh Mantri is here with us in the studio. Ramesh, thanks a lot for joining in. It's such a purple patch for the market, right? Everything that had to go right has gone right. But from here on, what's your view? Are you starting to get a bit cautious, or do you think that this runway is going to continue?
Yeah, I think one thing is clear that, the political risk has reduced significantly.
Yeah.
So a lot of investors who are waiting for something to happen wait for 6 months for the central elections to get over. Now those decisions will get accelerated, particularly FIs who are waiting for the political certainty to emerge, clarity to emerge by, let's say, in 6 months. Now will prepone that movement. So that's why you're seeing this one big shift, that people who are waiting for 6 months probably will now act in the next 1 or 2 months. And particularly January is when people come back from holidays, people start thinking about asset allocation globally. So that's a critical month on how people look at it. And also globally, some of the risks are reducing. So if you think of 2 issues that Indian markets face broadly, one is, of course, the issue of oil prices, the geopolitical risk premium that got priced into oil. Now, the Middle East situation now not being so worse as people feared. Crude has sold off, which is very good for India. And number 2, the fact that the inflation has come off a lot in the US, and now people are clearly talking about Fed rate cuts. It's now a matter of people are no longer discussing whether rate cut is going to happen in the US in 2024. It's a question of timing. So these 2 dimensions are strongly positive to India for risk assets. And within that, India, of course, fundamentally is very strongly positioned. And of course, the GDP data that came out, again, is a very strong supporter. And manufacturing, the story that we've all been talking about, now we started seeing these in numbers lately, that manufacturing growth has been good. So I think many stars are aligned for India now as we speak.
All right, valid points. Thanks a lot for joining and giving us that input. But, Sonia, we have played our part, right? And I think, irrespective of how the market does from here, but that equity cult here in India is developing, and we are part of this. Give us some more data points on that front.
I think Ramesh did a lot of the talking for me, but I'm still going to revisit, all the reasons why the equity markets are thriving and the reasons why the markets are at all-time highs. So let's start off with what's happening, right, in the industry. Everything is working right, and here are a couple of things that we've put together. Just look at the AUMs, the mutual fund AUM, and this is source-based information that we've got. The mutual fund AUM has crossed 50 lakh crores, the overall mutual fund AUM, for the first time ever. If you break it up, the equity mutual fund AUM is at 20 lakh crores, the debt mutual fund AUM is at 14 lakh crores, and hybrid funds are at 6.6 lakh crores. But this is the big number, 50 lakh crores in terms of overall AUMs ever for the industry. FIIs, as we said, finally have turned buyers after 2 consecutive months of being net sellers. So in November of 2023, FIIs turned buyers to the tune of $2.3 billion. If you look at the number of demat accounts, right, we were talking about how the equity cult is growing. The last number, official number that we have as of August of this year is 12.7 crore demat accounts, which is a growth of 26% on a year-on-year basis. So what's working for the Indian markets? Why are both FIs and DIs putting money into the Indian markets? Here's the reason why. Strong GDP, 7.6%, retail inflation at a 5-month low, 4.8%, political as well as policy stability. The young demographic, India has the youngest Gen Z population with the high purchasing power in the world, and that is the focus area as far as consumption is concerned. All-time high GST growth rate of 15%. In fact, GST collections jumped 15% to 1.67 lakh crores. And finally, Brent crude is also working in our favor at $75 a barrel, which is a 6-month low. So a lot of things coming together to ensure that more money flows into the Indian markets. But how are the market valuations after the rally? Surprisingly, the valuations are not too expensive despite the kind of rally that we've seen. Nifty is now trading at 12-month forward PE of 18.4 times, but the long period average is 20 times. So in that context, the valuations are not too expensive. Ramesh, you've highlighted a couple of these points for us, but on a valuation parameter, how are you placed, and what kind of elbow room do you think the Nifty has from here?
So on valuations, I think we are in a reasonable zone, and always valuations have to be looked in the context of the environment. Now it clearly looks like all the fundamentals are positioned in favor of India. As I said, right, you have a lot more political certainty now on the, politics is becoming less of a risk to India. You have strong economic growth. We're growing at 7% when people were expecting a slowdown in growth. You have interest rates which might be a tailwind over time. And of course, inflationary risks going down. So I think a lot of fundamental factors have been positive. And secondly, the government spending is largely focused on creating productive assets on the infrastructure. You're seeing a massive investment cycle on the infrastructure playing out, and also now private sector kicking in. So, and I would say the manufacturing story, the China 1+ is still in early stages because, manufacturing takes a few years to build out. A factory takes 2-3 years to build out. So it's not like tech services that 6 months you start an office and start business. So I think this is a long story that will have long legs. So in that context, I think valuations are reasonable for people to start, allocate money in India.
Okay. We were talking about FIs coming back, right? And Nigel has put together some data for us. Nigel, how is it looking?
Well, the FIs, they reappeared in November, but they're yet to make a sizable comeback, actually, and their impact is yet to be felt. You just pull up the last few months. In September as well as in October, they sold close to $2 billion approximately. And in November, everyone was thumping the table. They're back. $2 billion of inflows is what we got. But I said, let's look at the other markets. Whether you look at the Korean market or you look at, the Taiwanese market as well, they actually got a bigger chunk of flows in the month of November in comparison to India. So December will be quite crucial. I know flows, they thin down towards the end of the year. But at least as of now, it appears that the FIs are making a big comeback in the Indian markets. And in December, the flows, if you compare it with both those two peers that I was talking about, that's the Taiwanese as well as the Korean markets, well, we are getting a sizable amount of those inflows. So that's pretty good news as well. And keep in mind, the FIs actually, they haven't really played a big part in the Indian markets. In fact, their holding is at around 16.6%. That's the lowest we've seen in the last decade or so. And financials have been the weak point here in India. Keep in mind, FI exposure to India, out of the total exposure, 32.5% is towards financials. So if they have to come back in a big way and their impact has to be felt, well, maybe financials, banking names as well, could be the sector to look at. So we'll have to see whether or not, yes, they have come back, but can they make a bigger impact? And can, their holding from these decadal lows of sub 17% bounce back? That's going to be quite interesting. But Prashant, we told our viewers about retail, about FIs. What about the stars of this year, the breadth of the market, this mid and the small cap space?
Nigel, we keep talking about, Nifty index, for example, has been the strongest index this year. Not just in India, but around the world. I think no other index comes closer. So what is driving it, right? There are many explanations, but one simple explanation, I think, is, which we don't talk about enough, is the fact that these indices much better represent the sectors which are doing very well. And let me just actually put the data up for our viewers. So this rally, this fresh leg up started when? 31st of March 2023, right? That's the move began. It has not stopped since. The Nifty since then is up 20. Mid-cap index is up 47%. The small cap index is up some 60%. Nifty is up 20, small cap is up 60. Of course, end to end always makes it seem a little sort of skewed, because then you got to look at past performance. But from the 31st of March, there's been huge outperformance in mid caps and small caps. So what makes up the mid cap and small cap indices as compared to the Nifty? The sectors which are doing well are much better represented in these two indices. So look at industrials, for example, what we call industrials. In the BSE small cap index, 24% weight is what you call industrials. Guess what the number is in the Nifty? 5.5%. In the mid-cap index, industrials are 13% of the weight by market cap. In the Nifty, it's 5.5%. So big sort of difference, right? In the what you call materials, small cap index, the weight of materials is 19%. In mid-cap index, it is 13%. In the Nifty, it is about 7.5%. Consumer discretionary is another area. Would include autos, etc. Nifty, the weight is 9.5%. In the small cap index, it's 15%, and the mid cap index, it is at 15% as well. So, very clearly, these indices, as I said, are much more representative of where the boom is happening. And on the other side, the flip side, what is heavy on the Nifty? Financials and IT. So financials are 26% of the Nifty weight. In the small cap index, that is 12%. IT is 17% of the Nifty weight. In the small cap index, it's 7%, and in the mid cap index, it is 4%. So these are indices which have been plagued by problems, etc., and past outperformance, so they're not done very well. And that is the reason why, these indices seem invincible and they've kind of gone up one way. Valuations, just kind of, having said all of this, the fact is valuations are also stretched. I just looked at 1 year forward P multiples compared to the last 10-year average. Mid-cap index is at about 26 times compared to 10-year average, which is 21. And the small-cap index average currently is at about 20.5. The 10-year average is about 16.2 times or so. So, I mean, I think it's for everyone to see the outperformance, but valuations have also kind of moved up quite a bit. Ramesh, if you want to kind of come in here and... but my main question to you is respond to this, but what to do now? I think viewers want to know that. From here, what will make money?
I think on a 3-year basis, clearly valuations are now clearly attractive more in large caps than in small and mid cap. And there is a lot of interest and flows towards small and mid. I think investors have to take a forward-looking view of markets on a 3-year basis. The cycle tends to change on a 3-year basis in markets. Large caps are ignored. They're attractive on valuations. And we talked about the BFSI sector, which is again largely represented in the large cap sector. And then, of course, if the FPI money that Nigel talked about, if it comes back, remember that's going to come in the top 200 stocks in the market, which is good. Large part of that flow is going to come towards the large caps. So on a 3-year basis, clearly, people should start allocating a lot more money to large caps. And if you have too much money invested in small cap, take some of your profits and allocate to large cap.
Well, that's interesting, because even this week, why things felt so good was because HDFC Bank had its best week in the last 1 year. HDFC Bank was up 6.5%.
In 1 year, and how much it was up? 2%? 3%?
No, 6.5%. 6.4%.
You're getting happy with 6% move in HDFC Bank?
No,
of course, it's not rallied for the last 2 years.
Yeah, and in a week, and one more data point on HDFC Bank is, the last 10 years, it hasn't given a single calendar year when it was negative. Yeah. And at the start of this week, it was down 4%. At least as of now, it's maintaining that record. So from 2013 till now, HDFC Bank is set to protect that record as well.
So I'll give you another data point for HDFC Bank. Someone had shared with me in 20 years, if HDFC Bank has given negative returns for 3 years, okay, it's only happened thrice. This is the third time. And after 3 years of underperformance, the very next year in 12 months, it rallies 50%. Whoa. That's the record for HDFC Bank. So this is the third year when they've underperformed. So from here on, we need to see whether in 12 months they rally 50% or not.
Yeah, it's like the Indian team, right? It always feels better when Virat Kohli performs well or when a big name like, say, Sachin hits a century. So hopefully that big name in there is going to be performing. I'll tell you what, we'll slip into a short break. Up next, we'll take stock of the big exits made by Warburg Pincus in India. Stay tuned and come back for more.
CNBC-TV18